All right, welcome back, YouTube, and we're here for another video. Once again, where I'm going to give you guys some financial advice. Now, today I'm talking to my younger people, my people that are, young adults, and you're just now getting into managing money, and you're wondering what you should do. So, if you're, a young adult, 18 to 30. These are some tips for you. These may even be tips for some that are older than that, but I just want to give you guys these main 10 personal finance tips, and then I'm even going to throw in some bonus ones at the end. So, number one, start saving early and consistently. So, what do I mean by that? Start taking your money and putting it away, and putting your money aside for things that you know that you're going to want that are bigger down the line. Maybe setting up an account and putting money there for, a down payment on a home, or to finance a car, or whatever it may be. Have that money that's there put to the side, just for those things that you may want in the future. And make sure that you're putting that money there consistently, and you're not just spending and blowing through all your money. Thing number two, create a budget and stick to it. What do I mean by that? Every dollar that you make, have it accounted for. Know what you're doing with every single dollar that you make. So when it comes in, it immediately goes to where it's supposed to go. Remember, money is just a vehicle that allows you to get to the next place. So utilize it in that way. Make your money your little workers. Put it to work. This money's job is to save. This money's job is to pay bills. This money's job is to invest. This money's job is to have fun. Take your money and turn it into your own little personal workers. Thing number three, pay off any high interest debt, such as credit card balances. So if you have high interest debt, say you're young and you were somehow, in a financial situation, or you got tricked into a bad financial situation. I did myself. I ended up purchasing a car at a 15% interest rate. That was my first bad purchase as an adult. Take it upon yourself to focus primarily on paying off that high interest debt and paying off those debts extremely quickly, and paying them down aggressively and as quickly as you can. Tip number four, build an emergency fund. Right? So just like I said, you want to save money for the things that you want. You also want to save money for the things that you need. What happens if the roof caves in? What happens if, you get in a car accident? What happens if, anything of detriment occurs? You lose your job, whatever. What do you do then? You need to have that money that's put to the side, that's going to tell you, or that's going to be there as your security blanket, so that no one has to tell you later on, hindsight's 2020, you should have been saving money. Have that money already sitting there to the side in an emergency fund. Number five, invest in a 401k or another retirement account. I myself have a 401k, I have a 403b, I have a Roth IRA. Take the time out and put money aside in different accounts and save that money for yourself. You can even do this for children if you have kids. Put this money to the side so that for the future, when it becomes time for you to retire, you have something sitting there. Even if you're a successful business owner, you can have a SEP, or self-employed person's IRA, where you're able to put money into that account and utilize it and have it there for your retirement. Tip number six is going to be take advantage of employers that match contributions. So if you have an employer and they say, if you get this insurance policy, we're going to pay this percentage. Or if you put this much into your retirement, we're going to match it, or we're going to put this percentage back towards it. Take advantage of that. That's free money. Let your employer match your shares. Let your employer match your contributions and make that free money quickly and easily. Tip number 7, diversify your investments. So like I said, even as far as retirement, I have different retirement accounts, and some of my retirement accounts are investing aggressively and some of them are investing more modestly. But have some modest investments as well as some aggressive investments. Diversify them with different companies, invest in different places, have different accounts. You never know what could happen with one account, so it's better to have multiple accounts to safeguard yourself. Tip number 8, avoid lifestyle inflation. What does this mean? If you are making 20,000 and you go to making 30,000, don't start spending that extra $10,000. Start finding ways to put that money to the side or to invest it and make that money work for you to make you more money. You don't want to be taking the extra money that you make and putting it towards going up in lifestyle, buying new things that you don't need, cars and vacations and trips and things like that. Take the new money that you're making and find ways to invest it or save it rather than putting it towards things that you won't even need or use, 10 years down the line. Tip number 9, continually educate yourself on personal finance, or just continually educate yourself. You can never go wrong in investing in yourself or educating yourself. So make sure that you take it upon yourself to continuously educate yourself and put time into learning and growing and make it your passion to be a better person every single day. Tip number 10, seek professional advice when needed. Once again, you can never fail by educating yourself. Take the time out to educate yourself, invest in yourself, and learn from others. Learn from their mistakes. Don't be afraid to ask questions. Don't be afraid to look stupid. Take the time out to learn and build and grow. And it's best to do so from others rather than having to go to the school of hard knocks and learning yourself. And as I always do, I'm going to give you guys a bonus tip. And my bonus tip is tip number 11. Build your personal as well as your business credit. Reason being, you want to be able to have your credit to leverage off of. You want to be able to have your credit there in case of an emergency. And it's always best to have a resource rather than to not. Credit is something that builds and grows over time. So the more time you have invested in, the better off you're going to be. So never overlook any resource that could be available to you, even if you don't use it. What's the worst thing that can happen by investing in something that can benefit you down the line? Nothing. You can't lose when you invest nothing in to grow. So, as always, thank you guys for watching. Thank you all for being a part of the channel. Thank you all for subscribing, and we'll see you guys in the next video.